we're getting a lot of companies that we're following their story as they go through. Stephen Stewart's one of them. QC Copper is great because the last time he was on here, he was talking, forward-looking statements, what they were planning to do with their Opimiska project. And Northern Miner has got some good news. They pretty much what he said they were going to do, they've done. But I don't want to give that away. And yesterday, similar thing, right, with Canada Nickel coming on and updating us, Labrador Gold Mines, lots of great updates. And you're just seeing these stories evolve, and you're seeing these great leaders actually deliver on what they're saying, and we're tracking them in real time through these symposiums. So that's kind of a fun part of it. Anyway, that's my preamble. But here's the thing with QC Copper and Gold. They are focused on copper projects in the Chibougamau region of Quebec. And as I mentioned, it's all about the Opimiska mine complex, and some pretty stellar results there. Again, I'm not going to give it all away, but it's looking pretty good. And we're going to be joined now by their CEO, Stephen Stewart. Now, Stephen Stewart is also the founder of the OR Group of Companies. That's a private organization which is focused on natural resource discovery and development. And they've been making some headways themselves. Two companies in that group, Ore Finders and Mustango River, recently announced a partnership with Kirkland Lake Gold that saw Kirkland Lake take roughly a 10% share in each of them. So we know Tony McCooch and Kirkland Lake, when you get Tony McCooch to invest in your company, there's some serious reasons to do so. Now, if Stephen wasn't already busy enough with all of his duties with Ore Finders and the OR Group, he's also chairman of the Young Mining Professionals Group and founder of its scholarship fund. It's something that we at the Northern Miner Group try to support whenever we can. It is the largest mining-focused charitable organization that supports mining engineering and geology education in Canada. And we have a Northern Miner Scholarship through this platform that Stephen and his team have set up, and we're really honored to be a part of that. So, Stephen, there you are. I'm a little bit extra wordy today, Stephen. I don't know what it is, the Vancouver fresh air or something like that. Someone just shut me up. How are you doing, Stephen? It's great to see you.
I'm doing well, Anthony. Thank you so much for having me. It's great to be here. And you really stole my opening line, was really about how I love joining the Northern Miner. But what I really love doing is joining you guys in London. And I can't wait to get back there. We always have a great time. You guys put on a great show at Canada House, right in Trafalgar. It's first class. So, hopefully next year or sooner than later, let's get back there and get everybody together, because that we're missing, there's no question. Zoom does offer certain efficiencies, but we're missing out on the intangibles, and I miss that. So I look forward to it.
Very, very well said, Stephen. I couldn't agree more. And you have my word. We will get back to London. There's something about bringing Canadian companies to that London investment crowd. You just feel that Canadian pride, and yeah, we're onto something there, and we will be back at it. But listen, talk to us about QC, because this is pretty cool, right? You guys this is a serious copper project. That's what it's looking like to me.
Well, yeah, no. So I'll just jump right into it, because we do have great news. And you're very right. I was here 2 or 3 months ago talking about forward-looking statements and how we're going to deliver. And as of Monday, we delivered. And I suppose it's quite fortuitous that I'm here so quickly after the news and being able to deliver it. So I'm going to share my screen here, and hopefully everything goes swimmingly here. And I'll get started and give everybody the update on QC Copper and Gold. So just bear with me. So as Anthony introduced me, my name is Stephen Stewart. I am the CEO of QC Copper. We're on the TSX Venture under the symbol QCCU. For those who don't know us, we have the Opimiska Copper Mine Complex. This, as we say here, was a legendary mine. It was operated by Falconbridge. Huge production, multi-billion pounds, 1 million ounces of gold, high-grade vein systems out of 4 individual mines. We acquired it a few years ago, and we're sort of taking the Osisko approach, where we saw the opportunity to delineate a disseminated near-surface open pit resource. And that's exactly what we've done. As we've said, or as I said earlier, on Monday, we released our maiden resource, which I'll get into the details. But long story short, we delineated nearly 2 billion pounds of copper, pit constrained, and 82% of that is measured and indicated. And this project checks all the boxes, as we have all the infrastructure in place: rail, power, water, airport, everything already in on site as we benefited from the legacy aspects of this historical mine. So we do believe the Opemiska was a legendary mine, but it's reborn. And I think the entire Chibougamau district, where we're located, right in the heart, is reborn, and we're leading the charge. So forward-looking statements, everybody knows that this is our corporate overview. I just want to point out a couple key points there. We've got a market cap of $30 million. To me, that is incredibly cheap. And you have to strip out our cash. You have to strip out our $14 million worth of baseload shares. Anthony talked about the importance of uranium, and I couldn't agree more. Uranium is really a part of the green solution going forward, and we own all 30% of baseload, which is focused in the Athabasca uranium district. So when you net out our cash plus marketable securities, we're getting around $10 million for 2 billion pounds in Quebec, as well as 500,000 ounces, and our secondary project, which is called the Roger, which I'll sort of go through. But this is a high-level view of the Chibougamau district. You can see on the west-hand side there, this is the Opemiska project as it is known. It comprised 4 individual mines. Today, I'm only going to be talking about the Springer and the Perry. Okay, those were the 2 primary mines, but there was a 3rd and a 4th mine, which we have not paid attention to. Okay, so we've only defined these 2 billion ounces that 2 billion pounds that I'm talking about are only on the Springer and the Perry. So there's ample room for expansion, what I'm going to show on the Springer and the Perry, but also as we start to drill the Robitaille and the Cook. And last, I'll note the Roger deposit. We acquired that earlier this year, very opportunistically. It is 500,000 gold ounces with a copper credit. Again, pit constrained, and it's on the rail. You can see the rail run. This is CN Railroad runs right through us. This railroad goes to Rouen-Noranda, where the Horn smelter is, where we will be sending a concentrate. Alternatively, we can send it to Tidewater if we go east. So there's this project really does check all the boxes. As I said, we think we can fast track this because of its size, its scale, where it is, and all the benefits of infrastructure. So it's a very interesting project. And this is what the resource looks like. As I said, it's these are the key areas over here. What I draw everybody's attention to is the millions of pounds of copper equivalent. You add these 2 numbers together, that's 1.926 billion pounds of copper. The gross metal value of that is over $8 billion US. That's a lot of money, considering we are a $30 million market cap and probably a $10, $15 enterprise. There's lots of room to grow. I will go on the record with another forward-looking statement, as we think this is a mine. This is going to be the next mine in Quebec. That we have the opportunity to do that. We have the opportunity to fast track it, especially because of this measured and indicated. And why that's so important is it's not an inferred resource. It's a high confidence resource. We benefit from all that drilling that Falconbridge did and that we digitized and validated and brought into the 43-101 regime. I'll also note that not only are the drill spacing much tighter on measured and indicated, often 10 to 15 meter centers as opposed to 80 to 100 meter centers on inferred, we can take this M&I and upgrade it into proven and probable once we do a PFS. We don't have to do very expensive, intensive drilling to upgrade the categories. We're already there. I'll also point out we have a high-grade starter pit, which is key. I mean, this mine, a life of mine is decades, okay? If you're over 100 million tons, that's decades worth of production. But when you're evaluating the NPV, the IRR, and payback, how these things are valued, the early day cash flow is so critical. And that's why we have defined a starter pit. And we've got about 11 million tons in the first 3 years being produced at 1.26 copper equivalent. That's very high grade. That's going to help our paybacks. The other thing that the project offers is the cutoff grade. The sort of rule of thumb for an economic operation is to have twice the head grade of your cutoff grade. In this instance, we've got 4x our cutoff grade. The cutoff grade is 0.2 copper equivalent. We are 0.85% copper equivalent. So that's, this project looks robust and the market is reacting. But as I've been saying, Monday was day one. We're only 3 days into being able to define what this is. There's a long road in terms of value appreciation. So I think it's a good buy. But I'll also emphasize this is just the beginning. This is our initial resource. And this is what the resource looks like in our 3D model. So as I emphasized, not only is it measured and indicated, it's pit constrained. So everything you see in the red here is mineralized on this super pit area here, which we've expanded. And obviously the shaded area here is our conceptual pit. This has been an optimized pit. There's an algorithm that calculates the economics. Everything outside of this in the red is not being contemplated. Okay, so I'll point out, we know that mineralization is there. It's real. But it is not included in that 2 billion pound figure I talked about, but it will be, okay? When we go back and we come back with a substantial drill program, which we'll be doing in the balance of this year in 2022, we're gonna capture some of that resource, if not all of it. We'll certainly aim for it. So there's ample potential. That's why we emphasize this is just the beginning. We're gonna capture this. We're gonna widen the saddle zone. We're gonna capture to the east, there's the eastern veins here. This is new virgin ground that has never been drilled or mined. And so we did some step out drilling, got some good results, but we need more drill density. We need more drill density in and around the pit. So this is really low hanging fruit for us to expand beyond that 104 million tons of resource that we've defined. This is what the starter pits look like. Just very briefly here, again, I emphasize the early stage economics of long life projects are so critical. Because your cash flows in year 25 don't really show up in your NPV and your IRR. So when you can cash flow early, your payback of capital comes quicker and the project becomes more attractive to shareholders, more attractive to people who will finance the construction of this mine. And metallurgy, now this is something that most people don't pay attention to when evaluating opportunities, but metallurgy can kill a project. We don't have that problem here. This was mined for 40 years as a high-grade underground mine. The metallurgy is clean. We know how to process it. They produced a concentrate on site. 25% copper concentrate, for those who don't know, is very marketable. So everybody's going to want to get their hands on that clean, high-grade concentrate, which, as I said, we can ship east or west via rail. And we are going to be upgrading or updating, I should say, our metallurgical testing to reflect the open pit, because there is different metallurgical considerations when you're mining veins as opposed to bulk tonnage. And we think that work's going to come in at the end of Q4. Beyond the maiden resource, I pointed out, here where we're going to get some low-hanging fruit in the open pit as it's understood. But as I emphasized earlier, we've got a third and a fourth mine that Falconbridge operated that we haven't even considered, okay? We haven't drilled any holes ourselves into these mines, but we're going to rinse and repeat the same process that we used on the Springer and the Perry, which are right here. This is where the open pit is, and we're going to evaluate and drill the Robitaille mine and the Cook mine. The Robitaille is analogous to the Springer and the Perry in the sense it's high-grade copper with a gold credit. The Cook is on the other side of the Gwillem Fault, and it's a little bit unique in the sense that it's actually a high-grade gold mine. They were mining 5 grams per ton gold out of this with a copper credit. Our Roger project is something we'll also focus on. I've got a slide on that following that, but that's certainly an area of focus. But in the call it step out region, discovery potential, we are along the Gwillem Fault, and the Gwillem Fault is the regional controlling or mineralized controlling structure in the region. We've got 13 kilometers of it, and it's really underexplored. And as we go further east towards the town of Chibougamau, we really get into a VMS, volcanic massive sulfide system here. So there's all sorts of targets that we see here that could act as additional satellite deposits. So it's really about Springer and Perry getting that bigger, evaluating the potential for Robitaille and Cook to add tons and grade to our existing processing facility over here at Springer, and then look for exploration targets. This is our Roger. We get very little value for this. This is it's 535,000 ounces. Again, it's pit constrained, which is such an important consideration. It's about a 1 gram deposit with ample room to grow. It's on the rail. We view this again as a satellite deposit. This is 17 million tons at a gram gold equivalent. There's no question this is going to add resource and ultimate value once we start getting valued like we believe we should, which is the next mine in Quebec. So again, a lot of this stuff is just reiterating, but we got to go out there and tell our story, which is something that I've been doing as frequently as possible since this resource gets out. That's my job, is to tell people the value delta between the price you can pay today and where we think we are going, and quite frankly, where that resource defines us. We got a lot of work ahead of us. So there's more drilling to be done. There's more work to be done. We're starting to switch our thinking in terms of what do we have to do in order to build this mine? So there's lots of considerations there, and shareholders can expect some news coming up on that. And ultimately, this is working towards getting this to a production decision and de-risking it. PEA, maybe fast track to pre-feasibility, but in the meantime, before that happens, expect a substantive drill program to be announced. That's effectively, as I wrap up here, I'll note that social license, and this pairs into my comments about switching our thinking towards building a mine. And I'll note that we approached this opportunity early in terms of the community relationships with the town of Shapé and the region of Chibougamau, and that obviously includes the First Nations. This is an example, a photo here of our first town hall. We've held many of them, and we keep in close contact with them, so because it's so important to get everybody's buy-in. We believe we'll continue to be welcomed, as we believe this is going to be a huge driver, economic activity, and ultimately employment for the region of Chibougamau and the town of Shapé. First Nations, we're partners with them on our drilling and our services and support. So we pay very close attention, which is absolutely critical. I'll wrap it up here, but I just leave it with this slide, as because I think this just shows so well how our resource stands up within a pit, but how much upside there is. So we know how big, we know how small this is, and it's not small, it's big. It's 100 million tons plus at excellent grade. But as you can see here, all this golden mineralization, copper gold mineralization is sort of ripe for the picking. And that's where our attention is going to be in the balance of 2021 and certainly 2022. So I will leave it there. I'll stop sharing my screen, and I'm happy to answer any questions that any viewers may have. So thank you.
Fantastic, excellent, Stephen. Lots of stuff there to go through. I guess on the first one, just a point of clarity here: the resources below the pit constraint, so the Perry vein and the things that we're seeing there. So that's all out of the old Falconbridge data set. That's not actually, you haven't drilled that yet.
Oh, well, everything that's at depth. Okay, so for clarity, we absolutely used Falconbridge's drill database. We twinned a lot of their holes and validated that, call it old drilling, to bring it into the 43101 regime. We've drilled about 25,000 meters ourselves recently. There's probably another 10 to 15,000 meters that have been drilled, call it in the modern era, by the private company which we acquired this project from. So there's substantial modern drilling. I would say most of it, the vast majority of that modern drilling, was focused on the pit. We have not approached in a modern capacity the at depth potential. It was our opinion here that this thing has to make it as an open pit before we can consider going underground. There is absolutely underground potential. In fact, on the Perry, Falconbridge left 3 million tons at 3% copper in proven and probable reserves. I mean, those are legit reserves. Those are Falconbridge reserves. They're not some junior mining resource. So we know there's ample opportunity to go at depth. The question is, how big can we make the pit? Do we have to ramp underground from the pit? These are all questions that we'll be answering in the weeks and the year ahead.
Okay, excellent. We have one here from Paul. He's asking, how does QC Copper compare to other junior miners in the copper exploration sector?
Well, that's a very tough question. There's some great comparables out there. I think in terms, when you want to compare apples to apples, I don't see any comparables in terms of one jurisdiction. Okay, we're in Canada, which is critical. Not only we're in Canada, we're in Quebec, which in my opinion is the best jurisdiction in the world, bar none. We've got Plan Nord, which is a huge, I think, $40 or $50 billion infrastructure plan promoted by the government to assist exactly projects like QC in their financing efforts. We've got a very streamlined permitting process. So anyways, jurisdiction is great. Now, in terms of size, grade, and confidence, meaning M&I, there is no copper comparable owned by a junior mining company that comes close to that. You'll have to go to riskier jurisdictions maybe South America or maybe Africa to see any real comps. So I don't see any comps. So how I do it, in my mind, I compare us to gold companies, because I always say, look, yes, we're mining copper, but at the end of the day, we're mining money. And there are much more gold equivalent comparables. And the best one, I think, is Marathon. Okay, Marathon Gold. They're a 6 or 7 million ounce deposit out in Newfoundland, same jurisdiction. They've got the grade that we can compare to. I think they're 1.6 grams average grade. If you convert that 2 billion pounds at 1.85% copper that we have, convert that into gold, that's 4.7 million ounces at 1.4 grams gold. Okay, so that's sort of something that people can relate to more, because people are more familiar with gold. So that's the best comparable. They're an $800 million.
What's the market cap? There you go.
800 million. So, look, that's a bold statement, and we're not there yet. They are bigger than us, a little bit bigger than us, and they are more advanced down the road towards pre-feasibility. Okay, so, but that's where we're going. That's where we're going.
Excellent. And then the Gwillem Fault there, and to pick up on this point, Stephen, you're in undeniably one of the world's great jurisdictions for mining. I'm glad for our international audience you highlighted Plan Nord, and just Quebec is really a sensational place to go. Also, generally speaking, Aboriginal relations in Quebec, especially with the Cree more to the west of where you guys are. But I'm glad you highlighted that too, and maybe you give us a little more insight on that. Aboriginal relations generally way stronger, better job in Quebec. But given all these positives and the prospectiveness of the Gwillem Fault, you mentioned it is pretty underexplored. Why is that? Why hasn't there been more work being done there?
Well, first, I'll touch briefly on the First Nations, which is critical. The Cree in Quebec are very sophisticated. They benefited greatly from wealth generated from the hydroelectric dam power that was built in the 70s in the province of Quebec. So that did two things: that made them very sophisticated and understand how business is done. So that's great. We love doing business with the Cree. They're very sophisticated. Also, that's a subtle plug for the cheap power that exists in Quebec for the hydroelectric. It's the cheapest in Canada, certainly by a long shot. To answer your question about the Gwillem Fault, there's not a lot of outcrop. Okay, and so it's sort of undercover. It's not deep cover, but it's not, you can't walk in the bush and see the rocks, and so that just makes it more challenging. Part of our program, absolutely, in 2022 is going to be extensive geophysics along that 13 kilometers of the Gwillem Fault that we have. There's all sorts of targets that we expect to find, and there's certainly a couple targets that we have right now. So the Gwillem Fault, and that Gwillem Fault, I should note, runs right into the town of Chibougamau proper, where there's there's probably a dozen historic underground mines there. So it's a very, very fertile, mineralized area for sure.
Excellent. And then on Roger, the numbers you showed there were just on the gold, from what I could see. Is there any copper at all at Roger, or is it purely a gold play?
There is. So when I said it's a gram, that's a gold equivalent. There is a copper credit. It's a gold rich system, so it's predominantly gold, but there's definitely copper. We have found very clear relationship to whether the gold copper ratio relates to where you are, your proximity to the Gwillem Fault. So if you're further from the fault, it tends to be more gold rich. If you're closer, it tends to be more copper. So pretty much all of the resources on our property and in the town of Chibougamau have a mix of copper gold. It just sort of depends on your, as I said, proximity to the Gwillem.
Excellent. We have one here from Brian. Are there any former usable on-surface processing facilities at site that you can use, or do you need to build your own facilities?
No, there's nothing there. The old mill has been stripped off site, which is good. That's an environmental situation we don't have to deal with. Any mill that they would have used back in the day would not be big enough. Okay, I think they had a 5,000 ton a day mill, which is plenty sufficient for an underground operation. We're talking about bulk tonnage operation. We're not ready to quote throughput rates, but minimum 10,000, maybe 15,000. Look, we could get up. To put things in context, I think Malartic is up to 40,000 tons a day. The idea is to put as much profitable ore through that mill as you possibly can in the early days. So you want to build a big mill. There's no question that while the infrastructure is in place, which is critical for base metal because you're moving lots of material, we will have to dig a hole naturally, and we will have to build a mill.
Okay. And we have one here from Joel. Joel's asking, what is the strategy now? It's a bit of a long one, so bear with me, Stephen. What's the strategy now? Will QC Copper and Gold use their remaining cash to drill, or will the company do a modest stock offering to raise money before the next drill program? Other options could be to partner the project or sell some or all of baseload energy shares. What's the strategy to balance the need to not dilute shareholders too much, but also to move the project forward with more drilling? Great question, Joel.
Well, Joel, rest assured, I'm highly sensitive to dilution. Okay, so that's always been a fundamental consideration for all of our projects. And at this point in time with QC Copper, when I believe there's a huge delta between the price that shareholders have to pay to buy our share today and the value, the inherent value, where I see it very clearly where it's going. We're talking about, 9-figure valuations. We're going to be very careful about how we bring our money in. Joel correctly notes we do have around $15 million worth of baseload shares that we could monetize when the time is right. I'll also point out, we've been quite popular as of late in terms of people wanting to get behind us. I think we are a company that people want to get behind. And so there is no question that we have access to capital. Our entire org group here has been raising, a substantial amount of money, tens of millions of dollars in the last 12 months for all of our companies. And I think that QC Copper now clearly is our flagship. So there's no problem about raising capital. The question only is at what cost, how much, and when.
Okay.
And, Joel, where it's eventually we'll answer those questions, but it's just stay tuned.
Okay. And one last one here, because we are running out of time. It's from Anonymous, so we don't have a name on this one. They're asking about, they seem impressed with the scale of the project, since it sounds like a huge project, but they're asking more about the board and the professional expertise to drive such a big project. Can you talk a little bit about the team and experience?
Sure. Well, let me emphasize the key man on our team is Charles Beaudry. Okay, Charles is is well respected, certainly in Quebec as they come, and Ontario. He's a board member of the PDAC, and he has the respect certainly of me and his colleagues. He is responsible for the vision of this project. So hats off to him in taking it this far. As far as I'm concerned, Charles can take it as far as he wants. Now, we've got a lot of work to do on the geology. Charles, and perhaps I am not the right individual to build this mine. Maybe we are, maybe we aren't. We'll retool if we have to. Certainly we're having those thoughts in our mind, but in terms we got a lot of work to do on the geology, and Charles is the man. In terms of the board, we've got also Philippe Cloutier, very well respected guy. He's the CEO of Cartier Resources. We've got Pierre Gaucher, who is our board member. He's the owner and proprietor of GDD, which is a very well-known geophysical manufacturing equipment. And his family is the family that we acquired it from. It's his family's legacy. They owned it privately for 30 years. And again, very well-known. So we've got an excellent board. We've got an excellent team. We have the ability to add anybody that we think is going to help us drive this project forward. Now, that includes potentially some engineers down the road, but certainly where we're thinking is get ourselves organized for permitting. I mean, that's always a challenge. It's always a consideration as you come from sort of the resource stage and start to think, okay, guys, this is a mine. How do we lay the foundations so that we get there smoothly and efficiently? So those are the thoughts going through our mind right now, and in the coming, let's say, months, people will see certain additions.
Excellent. Stephen, we'll have to leave it there, but it's a great story. You've done a fantastic job taking up to this stage, and now we have lots of drill results, as Stephen pointed out at the end of his presentation. The next thing for investors to watch for is an aggressive drill program. Did you say 25,000 meters? Is that right?
I didn't say anything, but look, we haven't fully defined it yet, but the secret to success in this business is don't stop drilling.
Absolutely right. Absolutely right. We love to hear that. All right, Stephen, continued success to you and your team. You have a great rest of the fall.
Thank you, Anthony. I look forward to seeing you soon.
Excellent. You take care. Bye-bye.